Hello, active traders, and welcome to Day Trading Success. This is Ken Calhoun, your host, president of the original Day Trading University, Swing Trading University, and eMiniUniversity.com. I wanted to welcome you to tonight's event. Really excited because we've got a lot of dozens of different tactics for how to set up and go through professional day trading one step at a time, how to set up your charts, how to manage your order flow, how to scan for, identify, and trade the best of the charts out there, and how to do it on a more consistent basis. So thanks for being here. If you have any questions, feel free to post them anytime. However, I will be waiting until the end of tonight's event before I answer them, simply because I have so many people here. So we've got so much to cover. Go ahead and post your questions, and I'll answer them later. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, you hereby agree not to make any actual trades, not making any profitability or performance claims. It's all for education use only. For those of you new to working with me, you may have seen me featured in Stocks and Commodities Magazine, Active Trader Magazine, the last 12, 13 years. In one of my Las Vegas seminars, all my traders, we all have a great time at my Trade Master events, at the Money Show Traders Expos. You may have seen hundreds of testimonials, including video testimonials on my site from both professionals and regular folks at home as well. So thanks so much for making the company the success it has been. We have so many thousands of traders with me and so many of you here tonight. If you have questions, ask me anytime and I will give you a straight, honest answer. Just remember, though, it will likely be at the end of tonight's presentation because I have so many people here. So let's start off by asking, of all these different skills, just quickly, because I have so much to cover tonight, I'm going to go very rapidly through tonight's event. Which of these skills is the most challenging for you personally? A lot of traders find scanning. So far, that seems to be the top answer. And unsurprisingly, that's at the top of my list. But what else in terms of market profiling, developing a daily trading plan, setting your entries, micro pattern recognition skills, which takes many years to get right and is absolutely key to success. Most importantly, using micro candlestick patterns. I'm an expert at using candles thanks to my long 15-year collaboration with my longtime colleague Steve Nissen, the world's top candlestick expert, and I'm deeply grateful to Steve for teaching me how to use candles. I use them with 1-minute candlestick charts. You'll learn exactly how to do that. Trade management with exits and scale-ins, timing skills and tape reading. Which of these do you find you struggle with the most? If you want, type in a letter. I'll give you about 10 seconds. Think to yourself, if you were to just fix one of these or get really better or hone one of these skills much more professionally, which of these could help you make the most money as a trader, right? That's what we trade, is to make money. So which of these, if you fixed or got better at, kind of like in golf, you know, is your long game or your chipping or your getting rid of slices or club selection or whatever it is. And when it comes to trading, which of these do you think could really help? Tonight we're going to look at setting up charts, the signals to use, step-by-step advanced day trading, entries and exits with price action patterns, how to avoid danger charts and stops, micro trading candles and cups. It's kind of the framework for tonight. I'll be giving you dozens of different tactics to start using. One thing that I'm also going to feature tonight is, I just decided to add this as a bonus, is I'm going to be working through my actual trader's workstation, and I'm going to teach you how to set up both buy and sell orders using that as we go through various tactics. So do you think that would be helpful to learn from a real trader with his real trading workstation how to actually set up order flow? I think that's I was trying to think of how else I could make this even more valuable beyond the concepts and the patterns. How do you actually trade it? So I thought that would be a key missing link, that since most of the people out there in the industry aren't real traders or somehow can magically never seem to prove they're real traders like I do, I thought I would give you that as well. So we're going to cover that in tonight's event too. Let's go ahead and start off with how to set up your charts for day trading, the signals to use, and what their role is. And we've got a number of different things that I put in my workstation: 1-minute, 1-day candlesticks, 1-minute, 2-day candlesticks, over a dozen thumbnail charts, the market charts, the trend, the pre-market indicator, sector percentages, portfolio quote boxes, and the tape reading window. Let me go step by step through what each of these is and how you approach your trading each morning. One of the very first things that you want to do is set up a 2-day, 1-minute candlestick chart such that, again, for those of you who've been with me for a long time, bear with me, this is only going to take a few minutes, but I wanted to give everyone a step-by-step look at how these work together in terms of the signals and setups. So what we do, set up your charts to show the data pre-market so you can see any gap or directional trend. For example, One of the most important things you always need to be following before the market opens, this is a writer downer as they all are, is what are the spiders doing? Or even better, what are the E-minis doing, the ES? But a minimum, you can all type in SPY between 8 and 9:30. Is it a gap up or gap down? Or is it inside the previous day's range? The number one rule for professional day trading is we always like to trade out days and out charts like we had today. Things that are outside of the previous day's high-low. If you were to just stop trading when the spiders are inside the previous day's range, you would likely dramatically cut down your stop-loss rate. And the reason for that is institutional high-volume traders or high-frequency trading algorithms kick in at OHLC, open, high, low, close, outside of previous day's HL. And so once the market gaps up, continues on up, then you can look for trading opportunities like we did this morning in things like Cena, Valero, JKS, United Airlines did great. We got all these nice wide-range movers today, and one of the things you want to look for are these patterns. You have minor gaps that continue up above or outside of the previous day's high-low range. Okay, so anyway, the two-day chart, so that you can see the spiders, is a ritual that you want to use every single morning. You also want to have a wide, nice, easy to see black and white time and sales window. And it's very important that you do it the way I teach you. I've taught thousands of traders. I've done millions of dollars of real trades in my own account, my IB account, and also my Fidelity Sapphire, just to the long side in that. But anyway, time and sales properties, just make it a nice big, and this is all really important, make sure that you've got a nice easy to see 16-point bold Arial tape, not some little itty bitty 12-point narrow, thin, hard to see, therefore insignificant tape. You need to make this a core part of your trading, because following the tape, and I've published on tape reading for over a decade, and I've used it in my own trades for over 15 years, you're looking for the relative strength of breakouts as they move. That's how I was able to nail so many good alerts for my traders, for example, in the live room this morning with these alerts, most of which worked out. Anyway, the point is that the tape, and having a large, easy-to-read tape like this, no level 2 box needed, no total view. That stuff is outdated. You don't need that. You need the tape and a 1-minute candlestick chart. The other thing is having a portfolio quote box, and the trick is you want to have percent compute change from open, so that at the 9:30 opening bell, everything in your portfolio zeroes out. It starts at 0. And a good professional trader's approach is what we do is we just click on the percent gain loss and look for the early winners, which are the ones that are starting to take off the highest. And as those start to move outside of the ranges, we then set up our buy order flow to lock in trades and to set our trade entries on those continuation plays. You want to have separate, another quick tip, you want to have separate portfolio boxes. You don't want to mash all the stuff into one big convoluted box. Segregate or separate out your stocks, your ETFs, your sectors, your E-minis, whatever else you're looking at in my sectors here. It always helps to have things like gold and silver, finance, banking, semiconductors, your major market indices like the Dow and the S&P, the NASCOMP, biotechs, pharmaceuticals, the NAS Composite, the NAS 100 pre-market indicator. All these market signals are very helpful so that you can identify which sectors are taking an early lead in the market. That's one thing that's overlooked by a lot of amateurs is you guys aren't, well, not you guys collectively, but most inexperienced traders don't pay enough attention to the market signals, like what's the VIX doing, what's the ARMS index, the trend doing, what's the broad market in terms of 2-day high-low breakouts or breakdowns doing, and how do you make a trading plan that puts you in the money on your trades each morning. So that's one thing you want to set up as well. So quote box with stocks, check. E-minis, both the ES and the NQ, this helps that you can see relative strength on the opening market. And also if you're an E-mini trader, of course, you want to have the ES 1-minute chart as well. And I'll teach you how to use that. You can see it's still going right now as we speak. Also have your sectors, and the other thing to put in place that many of you may not be familiar with is the ARMS indices, also known as the trends. Make sure you have the NASDAQ and the NYSE trend are both different, and they both have different signals. So oftentimes they're divergent. If it's under 1, it's bullish. If it's over 1, it's bearish. And I'll teach you how to work those into the market later. But just make sure you have both a NASDAQ trend and an NYSE trend, NYSE trend. And those are the symbols. At least I use these signal, and those are the symbols in that. Okay. the last most important thing to have in your hip pocket as a professional day trader is always have these 1-minute charts that you can follow up in market. Let's say this was the opening bell today. And we've got an open range breakout. One of the things that you're looking at is on the, let's say it's the opening bell, okay, 9:30, ding, 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 the market's going, okay, Cena.com, it's starting to move up. It's kind of simulating the passage of time here. Always look for these micro cups during the first 5 minutes. And one of the quick writer-downers is look at how large the whole real body of the candle is at 9:30 on whatever you're looking for to trade. If it's a wide range, meaning it's bigger than the pre-market candles, then that's usually good for a long play at new highs. You can set your order flow in at 8 to 15 cents above the high of that candle, right? So if I were to, let's say I'm looking at this thing pre-market, and I want to trade Cena.com. And that's what it looks like. Let me go ahead and put this together. Well, let's say I want to just trade, I don't know, just 100 shares. And I'm going to put in a stop order. Now, if you want, you can use a stop limit order, okay? But let's just make it simple. A stop order at whatever price you want to get in, right? And so you might want to enter that at, in this case, it would be up at, say, 68.8 or so, wherever that entry is. Where's your order flow going to be? Anyway, the point is, when you set up your orders, make sure you just simply click on the ask for buy, set up whatever the size is. If you want to enter at market, and this is a momentum trader standpoint, you just wait for it to start to punch to new highs and click transmit on that. What I like to use, I'll use either buy stop. It doesn't open this up for me because we're out of market, but normally you can type in the stop value of where you'd want to get in at that price, and that way you get an order fill during the open. So anyway, once it starts to move, you know, you put an initial, say anywhere from 20 to 40 cents maximum stop. You can trail the stop if you wish. Be on the lookout for things like early price action clues, like bearish engulfings like this, right? It's always fine to sell out at the first sign of a bearish engulfing or a shooting star. So if you sell there, you can always get back in on a recovery cup if it comes back up to life. Now here's another quick tip. For professional candlesticks, always look for wide range candles as the start of a new momentum entry. And you look for that at the right side of a cup pattern. Other people have been calling cups other names, but I won't do that. We all know these as cups. Looks like the letter U. Good professional tip is look for an entry right above any whole numbers. So it might be 70-10, 70-15 on a continuation. So anyway, those are the type of setups in terms of, it's kind of the basic of how to set up your charts for day trading. Okay. Another index that you want to have, and by the way, it's good to have at least 3 monitors for day trading, right? Whatever you're looking at, you have a monitor on the left. That's where I'll put things like, I put my trading workstation on the left. I have my main monitor here, and I'll have a bunch of thumbnail charts on the right. And I'll show you how those work later. The last thing that I want you to have as part of your trading workstation, usually I'll put this on one of these side monitors, is the NASDAQ 100 pre-market indicator. It's also known as the QMI. And this is vitally important that you set it up like this. And I'll just share with you how I do it. I've done this for over 15 years. Set it up so that you have the open at 8:15, the close at 9:25. And what that does is show you the pre-market buy and sell volume, or the pre-market, I should say, directional bias in the NASDAQ 100 before the market. And you want to find things that have at least a 4 to 6 point uptrend, or give preference to those, or at a minimum, if you see a bullish cut breakout, that's good. If you see recent buying action, that's good for longs. And that's a lead indicator before the market opens that tells you whether or not you want to go long or short or stay clear of the market. So those are the type of things you want to start paying attention to in terms of setting up, you know, the order flow. So that's kind of just the basics on setting up your charts for day trading. That's the workstation. That's what you need. The main thing is the 2-day chart, your the candlestick 1-minute chart, so you can follow up. What I will do is when things are starting to move, I will go from this chart to the 1-minute chart. And that way I can follow up live to see as price action is moving and the tape is scrolling by. Is it worth taking a shot at? And how do I set up my long and short triggers accordingly. So that's one thing to look at in terms of what to put up in your workstation. So that's just a quick starting thing. Now what not to use, what doesn't work, is level 2 or 3 or total view, and that's because market maker head fakes, that's outdated. We used to shadow the axe back in the early 2000s, but as me and most of the professional community, even my colleague Don Bright here at Stocks and Commodities Magazine even says, this was last year, Don Bright's one of the top experts in direct access trading, DAT trading. He's one of the old school, most famous, best known, best respected guys. He runs Bright. Anyway, he even also says, I was taught that we could tell how weak or strong the market is by checking the bids or shares or sell side. Can you explain? No. After 2007, that became worthless. He said the depth of book even more meaningless, right? So after 2007, it was a good strategy back in the day. In fact, I'm the original guy who used to teach people how to do that at my, I don't sell this anymore, so I'm not plugging anything, but my advanced day trading VHS that then became a DVD. I had how to follow the axe, how to spot and avoid market maker head fakes. I had competitors rip off my ideas. You can watch a video from back in the day, even at advanceddaytrading.com. Where is it? Here's this is back before we had Camtasia. I was over the shoulder with a Sony Steadicam, and I was taking a shot back in the fraction days of using level 2 and the rest of it. This is a 14-year-old video. We no longer do that in the professional world. So amateurs are out there trying to tell people to use level 2 or total view or trying to shadow the axe. That does not work. Don Bright says so. He's the world's or the top. He's the top guy I know, the go-to guy for direct access trading, and I'm also one of the top experts in day trading. And we all say nobody uses, they don't waste money on, depth of the book is meaningless. We don't want to use that, so that's not something you want to do. Also, one trader had asked me about this morning, you don't want to use longer-term charts because there's too many conflicting support and resistance levels. The problem is that with that is, let's say, you know, I was looking for a Cena breakout, and in fact, what was the breakout trigger? I had my traders in toward the upward move here. If you pull up, say, a multi-day chart, let's say you're looking at, you know, say a, I don't know, let's say a 5-day chart, you may not want to get in, or let's say it's a 10-day chart. And I would not have gotten in during the breakout because I'd see previous resistance here, for example, and I'd second guess my entry over here. And it just becomes very confusing. So to keep things simple, which is I'm a big fan of, and straightforward, make sure that you're just using the right tools as a combined system. So you have a 2-day chart and a 1-day chart for momentum entries with the tape, with candlestick patterns to confirm either breakout cut patterns or bearish engulfing or shooting stars to get out, and use that as the core for what you're doing as a trader. And of course, you know, you don't use bar charts. I did have for morons only, but I was polite, so now I changed it to for amateurs only. But bar charts, everyone knows you want to use candles instead. Now, let's take a look at our pre-market plan. What do you do between 9 and 9:30? Step by step. I want to break it down for you. One of the things I want you to start looking at are these 4 categories of things. The S&P futures, or at least the spiders, okay, and the E-mini ES charts, I showed you that already. The QID, I showed you that. The pre-market gaps, and previous days wide range stocks. Now, this is really important when it comes to scanning. You do not, as a day trader, want to be trading overpriced, way up in the sky things like Priceline or Google or Amazon. But just as importantly, even more so, even though it may be tempting to trade cheap, no-name stocks because they're cheap, that's fool's gold. You don't want to do that. That's a false economy. What you really want to do is trade instruments that are priced between that sweet spot of, say, 20 and 70 bucks a share, with at least 1 million shares a day. This is a really important metric. 15,000 shares per minute is the absolute minimum that you want to trade instruments so that you have liquidity and not too much wide spreads or slippage, and also minimum 1 point previous day's range. So, which of these would fit the criteria, say, for tomorrow? Well, WWE does. We are over 15,000 shares a minute on average in market, and it does have at least a 1 point range. It did do a 2-day high breakout, so kind of an ascending triangle, eh? We've got a good uptrend continuation. So as a day trader, I'd want to go long at, say, 30.25 or so, or short at 29.20. And again, using price action candles to light the way. Here's another great chart, Valero today. This one did really good. And you could see here, minor gap. Always be on the